Hey there, and welcome to the Apartment Building Investing Podcast. I'm your host, Michael Blanc. Super excited that you're here. Today's guest actually did quit his job with single family houses. Very rare bird, but now he does basically apartments full time. Before we get there, I have my co-host here. With me today is Garrett Lynch. Garrett is Director of Acquisitions at Nighthawk. He's got unbelievable amount of experience. Let's get right into the interview with George. Let's do this. Hey, George, welcome to the show today.
Thank you. I'm excited.
So we're going to get into your story, but give us a little background on yourself, 2 minutes or so, and just give us an idea who you are, what you've done, and then we're going to get into it because you've done a lot of really cool things.
I'll give you the shorter version. I started with single family real estate about 15 years ago in college, studying to be an electrical engineer. Knew I didn't want to be an engineer, knew I wanted something else. That's when I discovered real estate investing. Finally ended up doing enough deals on the single family investment side where I quit my W-2 engineering position. I then started doing a lot of single family fix and flips, wholesales. I did some small multifamily properties and started doing some new development as well. Started a construction company about 11 years ago, and that was to scale my fix and flips. It worked well. I was able to get to about 45 homes a year or so. But then about 4 years ago, I was introduced to multifamily syndications. That really caught my attention. I had built a successful contracting company. I had built the single family investments, but it was very transactional. Didn't have that cash flow coming in. I didn't feel like I was building that generational type wealth. Looking at multifamily syndications and buying these large multifamily properties, I felt like I can do that, doing that. So I became extremely passionate about it. That's where I'm at now. I'm after this month, should be at about 2,000 doors and looking to get to 10,000 as soon as possible.
That is fantastic. That's awesome. Hey, so you were exposed to real estate early on in college. Did I hear that right?
Correct.
How did that happen? Because I was doing other things in college and it wasn't real estate.
Yeah. No, it was towards the end of college. I started, I got it in my head where I didn't want to be an engineer. I just knew I didn't want to do that. And I started doing some research and I kept coming across researching successful individuals, and they had real estate investing, either that had built their wealth or they had built more wealth with it.
So wait a minute. So you didn't want to be an engineer, which I'm completely offended by because I was an engineer. Though, in your defense, I really didn't think too much about my job. I was like, I need a job. I just got to pay the bills. And engineering at the time, as it's today, just you make a lot more money. So I was like, I'm just going to go that way because I'm pretty good with computers and math. And so I wasn't even thinking about, now, what led you to think about not a traditional career path? Because you're surrounded by friends, family, people around you who obviously the next thing after college is either more college or a job. What made you even think about something besides a job?
I wish there was this moment that happened.
That's what I'm looking for, George, a flash.
Growing up, I was around, most of my uncles own their own company. So, I was around that, and maybe it just kind of rubbed off, and I just felt like I needed to start my own company.
Well, you had role models, it sounds like. I never had an entrepreneur around me when I was growing up. I didn't even know it existed. Like, the only thing I saw was my dad and some of my relatives, and they all had jobs. I think role models are really important just in anything in life, because without role models, you're limited by your own reality, really. And if you don't see something, you have to be super creative to say, well, there should be something like it. I haven't seen it before, but I'm sure it exists somewhere. I'm that kind of guy, right? And a lot of people struggle with that, which is also why explains why we have, I think, so few women in the business, even minorities in the business. There's just not a lot of role models. But you had role models in the entrepreneurial space, and at least it sounded like it was okay for you to at least think about it.
Yeah, it was enough, I guess. Even thinking back, one of my uncles actually owned apartments. I wasn't around it that much, but it was there. I guess I knew it existed, or the opportunity was there.
You got out, you got your feet wet in the business, and then you had to scale it. And I think I have to imagine that, there was some pain around that process. Talk to us a little bit about that. What did you go through? You're getting into the business. You're like, man, I see this is working. I want to make it bigger. What kind of problems do you run into in the single family space trying to scale that business?
It's definitely been a roller coaster. So, I decided, I quit my job and decided to do full-time real estate. It was probably around 2006. Then 2008 came. So I had to weather that storm, and that's actually what I'm born and raised in South Florida, and that's what had me move to Dallas. Was I wanted to keep doing real estate, and South Florida was hit too hard at that time to even touch it. So that was one. And then once, I got things going here in Dallas, it was the scaling, like you're saying, how do you do this? One of the issues I ran into in the beginning was if I wanted to scale the fix and flips was having a good contractor. I got burned twice, pretty bad. And that second time just, that made me want to start my own construction company. I realized that there's only so much one individual can do or manage. And then that's when I started focusing more and more on building out the systems so that I'm not the only one that knows how to do something.
I want to get back into scaling, but before we get there, so you were able to quit your job flipping houses, right? That's what which by the way, you're one of the very few people that was able to do that, probably because of the scale that you've had. Why were you able how were you able to quit your job flipping houses, and what kind of scale did you have, and what kind of systems did you have in place where you felt comfortable in doing that?
The time of the market probably helped a little bit too.
It was right before the recession, right?
Yeah, we were doing wholesales, quite a bit of wholesale deals, and then at the same time, cherry picking the best ones and doing those as fix and flips. We didn't have too many systems, to be honest with you, at that time. I mean, we had a decent amount of marketing going and leads coming in. It didn't take much for me to leave my W-2.
What kind of volume?
Maybe 6 months consistently of making enough money where I felt like I was losing money by being at my W-2 job, that I could be putting that time towards the investments and make more.
Yeah. I mean, I remember when I first flipped a couple houses back in right before the recession. I made as much money in those 2 house flips as I did in my entire job. It was like a huge eye opener for me. Of course, it was quite a bit of work, and I had to pay a lot of taxes. But that was beside the point. So you said, because of the recession, you moved from Florida to Dallas. Now, did you have to start completely over from scratch in Dallas, or how did you transfer your business from one to another?
I mean, from scratch.
Talk a little bit about that, because I know you knew how to do it, but you're still starting something. Your whole marketing starts over from scratch. Your whole personnel starting over from scratch. Like, what did that entail?
A lot of time and effort, but it was It was crazy, man. We got here, so my partner and I decided to make the move. So we rented out a house, and it had a big room in the back, and that was pretty much our office. And then from the second we got here, we knew somebody that had made the similar move about a year ago before. So we met with them, and they were doing pretty good, and we saw what they had going on. Every day we were networking. Every day we were out networking. We were at every single real estate association meeting. We just started building that list from scratch, like you said. Every sign in the ground that had a number, we were calling that number and getting their information and building the list.
You're at everything. You're at every real estate event. And so I have to think that, in the multifamily space now, I have to think that we're kind of going back to your beginnings, that, networking is a very important part of the business. Talk to us a little bit about that. How has it helped you, and what is your strategy around your networking and building your contacts?
I'm glad you brought that up. So that is how I built both companies, right? The construction company and the real estate investing was through networking and building those relationships. Down that road or that journey, I kind of lost that. I stopped going to networking events. I stopped educating myself, and I got so involved in the day-to-day. But when I got into multifamily, I realized that was going to be even more important than it was. So I had done it before. I knew the steps that I needed to take, which was pretty much go to everything. You're building a list from scratch. You got to go to everything and meet everybody you can. I am strategic about it. I'm not just getting everybody's business card, but
Why did you say it was even more important than the multifamily? Like, why did you have to network with multifamily, and how did that help you?
it's more of a team game in multifamily than it is single family. It's a lot easier to just close on a house by yourself than it is $50 million property. That's why I say that, you're gonna have to meet some partners, you're gonna have to build a team. And like myself, we have a lot of co-GPs on our deals that we partner with. So it's really important.
So you have the team right now. You got partners. You got a good sized system going. Do you still go to every event? What are you taking away now versus maybe in the beginning you're trying to get that network going? What are you looking for now when you go?
Now it's just building stronger relationships. You see some of the same individuals. I mean, you always meet new people too, but just building that stronger relationship. Like every time I see you out, we get to build on our relationship and hopefully partner on a deal.
Now, you said you have a partner for your single family houses, and it sounds like your partners on the multifamily. Talk about your partners. Why did you partner, and what's the value of those partners? How do you split up your roles a little bit?
One of the reasons I decided to go the multifamily route and put all my focus towards this is because I want more time, right? The freedom and time to spend with my family. To do that, it needs to be built like a business. It can't just be a solo entrepreneur. I've done that, and it just takes a lot of time out of your life. So that's the reason to have a partner, is to build the business. Not that you need a partner to build the business, but you can divide those roles and do it quicker. Mainly as far as our roles, I'm usually the visionary in the company, trying to direct what path we're going to go in. And then my partner Eric is more of the implementer, the one that is in the day-to-day, making sure we execute that vision that I have.
You have the book Traction behind you.
Yep.
Talk a little bit about that and how you're using that in your business.
Yeah, I got introduced to that book maybe right around the same time that I decided to make the move to multifamily. And it's been huge, just being able to put a system of how you run your business together, from our weekly meetings to our goals. It helps track it all and keep everybody in line and on the same page. So I mean, it's been massive.
Compare multifamily, because that's what you're doing now, to other stuff you've done. Like just some pros and cons, because you've done a lot of stuff when arguably you've built a pretty significant business around single family houses and wholesaling, and then a construction company. So you kind of talk about how multifamily is different or similar, and maybe which one you like better.
The thing that I like about multifamily is if you're able to build a solid portfolio of multifamily properties, there's a lot more you can do with that. You can branch into other companies or bring in other companies in-house. Even with the single family, the idea of starting my own construction company was, one, to take care of our flips, but to also be able to offer that service to other investors. So I feel like in multifamily, there's so many different ways you can go with it.
So how many projects are you guys working on at any given time? Because you guys are doing your own stuff with the construction company, and then you take on new clients. How do you manage all that? Talk about that.
Putting together a good team. It depends. COVID slowed us down a little bit as far as the amount of projects, but we're built to be able to take on and continue to take on more projects. I do have the luxury of being a little more picky on what projects we take on. That's one thing I learned early on. In the beginning, I'd pretty much take on anything and everything, and there was no real focus. It was just like, yeah, you need a general contractor to do this, sure, we can do it. If the project's not a certain size, then it doesn't make sense for us to waste resources on there. I don't want to say waste, but pool resources. And yeah, we've got systems in place. If we need to bring on more project managers, we can easily do that. And take it from there.
You talk about people a lot, like team members, and it's all about the team and partners. It's a very common theme. And I'm just wondering, how are you attracting these quality team members? Can you share any kind of secret sauce to attract these team members and possibly even to keep them?
It's just putting the word out there. I think we don't have a real secret sauce. And anybody that knows the way we worked or works here, they talk good as far as how we work with each other. And then how we keep them is, I always want to make sure everybody's happy and everybody's expectations, as far as their expectations from us, are being met. Continue to check in with them on it.
So you have a construction company. Do you guys have a property management company?
No.
Have you thought about starting one?
Yeah, quite a bit, but not yet. I mean, I just I know what it's taken to build the construction company, and I know what it's going to take to build a good property management company, and I don't think we're there yet. I think I mentioned 10,000 units by then for sure.
So what is the consideration of a property management company? Because typically, we tell our people, it makes a lot of sense to third-party manage. However, at a certain size, as the amount of asset management fees and property management fees gets larger, at least for us and some of our peers, property management is probably the hardest part of it because maybe the properties are geographically, dispersed. Sometimes even within you have different property managers. Even within the same property manager, you have a different regional or manager, and so you get inconsistent results. And we constantly struggle with that. And so we thought about, my gosh, wouldn't it be great to start a property management company so at least we have more control over it. It's at the end of the day, it's still a people problem, right? Because it's still all a function of the people that you're bringing on. And if they don't perform, you have a problem. If they leave, you have a problem. What is the consideration that you have as you think about creating a property management company? Why would you do it? And you said 10,000 units, but it's probably before then, I got to say, George. And
getting to that point.
Getting to that point. So why would you do it, and when would be the right time to do it?
Why I would do it is, you're 100% right. I mean, it's just control. Whatever you can bring in-house. Same reason I brought in the construction in-house. You have more control. You're able to implement your systems, your procedures, and you make sure things get done a certain way. My biggest thing with property management is it's all about hiring and firing. Hiring, finding the right people, firing them when they're not. That is probably the hardest aspect of building any business.
Construction is no different though. Construction is kind of a high turn. And I was in a restaurant business, it's very high turnover. Unfortunately, it's a very challenging business. What's preventing you from doing that right now?
Time. I'm focused right now on building the portfolio, and I feel like it would take a good portion of my time.
I mean, Garrett, for us, we would do it only if the problem becomes not only just intolerable, but you really need someone to head that up. Like you said, you got to bring in a team member who has most certainly have done it before, right, Garrett? I mean, that's the thing.
I've done it. I know it happens.
Yeah,
I know exactly what happens. My first business, we did it because we just got so fed up with the third-party management companies we were using. So we're like, let's just try this. It's challenging, and I would agree with you, George, that it definitely is about that HR department. I didn't even know that you needed to screen people in the beginning when we started our company, and I learned real quick that that's what you do. So you're absolutely right. It's do you want to take on that time to get into the whole HR side of property management? And so I would agree with you on every aspect of that for sure.
Yeah. I mean, even if you bring in an all-star that's done it and built a property management company before, it's still going to take some of your time. You're going to want to be on top of that. You're going to want to be checking in with them and all that.
Now, why did you stick with a construction company? Because we're just talking about it is still a people business, high turnover business. Now, I know you had a construction company in a single family house, but just because you started something insane doesn't mean you have to continue it. And you decided to continue doing it through the multifamily. Why? What problem are you solving by having your own construction company for the multifamily stuff?
I debated whether I sell the company and go into the multifamily without the construction company, but I know what it did for the single family and how it helped us scale. and I wanted to bring that over to the multifamily where I can feel confident, especially if I'm taking on a heavy lift. I know I can do it. I've got the construction company behind me.
So you've been able to raise quite a bit of money, probably millions. Talk a little bit about how you're able to raise progressively more capital.
Making that switch from single family to multifamily, that was one thing I had no experience in. We had some private lenders, just a couple of them, and that's how we were funding our single family stuff. Brand new to me. I had to, one, I guess, get familiar with it. I invested passively quite a bit in the beginning to kind of just, first thing was to get a feel for it. And then once I started seeing the benefits, now I do it all the time. I knew I didn't have that database already. So I had to build a database full of accredited or sophisticated investors. I've always been good at marketing, so I didn't think it'd be an issue, but definitely had to ramp that up.
What do you mean by marketing? What are you talking about, George?
The stuff you do every day. No, just branding yourself, one. If starting from scratch and just coming into the world of multifamily investing, nobody knew who I was. Nobody knew who Elevate was. I needed to start with the branding, and then I needed to build that platform, and now expanding the reach.
How are you doing that? Talk about the elements of your marketing.
So I've got a VA that works for us full time. He does a lot of our content building, and then posting on our business page, and we've got a Facebook. So platform wise, we're posting daily on Facebook, LinkedIn, Instagram. I've got my personal pages, and then we've got our business page. The VA helps creating a lot of that. I still kind of manage my personal pages. And then that's social media. So then we create a funnel wherever, once we get those leads that come in, which then gets into our database, which we keep in a CRM. And then we do email marketing. We need to get better as far as text. I saw you guys are doing some of that. And the voicemail stuff, which is great.
We're tinkering. Tinkering.
Yeah.
If we're not, we don't want to piss people off. On the other
Correct.
hand, we find that a lot of investors specifically, though the open rate is very high, the open rate is not 100%. And so we know a lot of people either are not seeing the emails, and we also know that when we do a deal and then they find out that they couldn't get in, they're also pissed. Why didn't you let me know? Well, we did. We sent you like 5 emails. You didn't open any one of them. I never saw it. And so we have to make sure that we're approaching investors from a variety of different media, and at one point, determine what is their preferred medium, and then also being very sensitive to, hey, I'm not interested in this deal right now because I just invested in your last one or whatever. I want to stay in your list, but I'm not interested in this particular one. So implementing that functionality is important as well.
So how do you guys manage your lists of investors, George? You guys are doing the whole funnel thing, and then do you go deep on them? Do you just kind of keep it broad? Talk to us a little bit about how you manage those lists and how you get them into deals.
We use ActiveCampaign. I think you guys do as well. Is that right?
Absolutely.
Yeah.
Yes.
Okay. As soon as somebody joins our database, we want to speak to that investor as soon as possible. And we want to get a feel for, why did they join our database? Are they looking to invest right now? Or they just want to learn more? Whatever it is, all that information gets put into our database, ActiveCampaign. And then we make sure to tag each person, depending on what their goals are. And then when we send out our message, we try to keep it as strategic as possible, that matches with their tags. We're not 100% there yet, but we're working towards it. And then, like Michael said, trying to find that middle ground where you're contacting them too much or not enough. And it's hard nowadays. It's hard to keep people's attention, and I know it, because I'm also investing passively. Like right now, I've got a deal that I know I'm going to invest passively in. I've already made my mind up, but I keep not having time to go and fill out the application. And I'm not going to get upset if they reach out to me again.
Yeah, I mean, we're going through this right now. We have commitments, and people are just dragging their feet, logging in, or filling out the DocuSign, or or wiring the money. And you have to be patiently persistent.
Mm-hmm.
Yeah, right, Garrett?
Yeah. Oh yeah. Right on that timeline now. If you got a tight timeline, then you're trying to be very patient, but you're also like, okay, come on, guys, let's go, move along. You push the button in your bank.
So George, what's next for you guys and Elevate? Like, what's on the strategic horizon?
We're exploring, like I mentioned, co-GPs. We're exploring some different partnerships. Got other investors bringing us deals all the time, and just kind of sorting through that and seeing which are the best partnerships we should get into. And then we go through our own deals as well, and looking for deals. Right now there is a crazy amount of deals on the market, so I've been fine-tuning our system for evaluating deals and how to get through that and just focus on the ones that hopefully will pencil out.
One thing you've done that's unique that I don't know if most people know about is that you've kind of cracked a little bit into the institutional side as far as like your preferred equity and stuff like that. Talk to us about how you got into that and how you managed those relationships, because I think that's pretty interesting how you guys are doing that.
So we got lucky. We one of our co-GPs is got a crazy portfolio. They've got over 10,000 units. They've exited I think over like 6,000 units. So they've definitely got that track record, and we kind of leveraged that track record to get in with some of these preferred lenders, preferred equity partners. And then once you're in with them, I mean, it's just building that relationship. We're constantly talking to them and in front of them and kind of seeing what their criteria is as the market changes. What are they looking for? We just had a call with one of our preferred equity partners last week, and they're thrilled. They're pretty much ready for the next one. So we've done our job. It's got its pros and cons, but I think the pro outweighs the con when you're trying to raise a good portion of money.
So as we get to the end of here, this has been great. I just love your story. You've done so many different things, and you're just a true entrepreneur. If you could have a conversation with your younger self, what would you tell yourself? What would you do differently?
One is I would encourage myself to build out the systems. Maybe not every single little detail. Put a little more thought into it before the craziness and before your business gets so busy that it's hard to find the time to do it. Because I've been there and it's rough. The other thing would be to skip single family and go straight into large multifamily.
And do you think you could have done that? Looking back on it right now, could you have skipped the single families and gone right into multis?
I don't see why not.
That's what I'm looking for, George.
Yeah.
Why not?
Yeah.
Yeah, it's so cool. George, it's been great. Tell us how people can connect with you and Elevate.
We've been doing a lot of updates to our website. You can find a lot of free content on there. If you go to elevatecig.com, and if they want to go ahead and shoot me an email, it's the same domain, Jorge or George, Jorge @elevatecig.com. I can send them. I've got a bunch of stuff on CapEx and due diligence, and also questions to ask a deal sponsor and some other stuff.
That's awesome.
You can't find these guys. I mean, you're not looking. They're everywhere.
Thank you.
Yeah,
Something's working on that marketing engine.